Alright, so what I'm going to go through first, I'm going to go through Friday's trades, all the way from the higher time frame down to our entry. I'm going to do entry in full detail, and that includes I won't fully explain the entry itself, but I'll give you a general idea of what I teach in the advanced course as well, so you boys can learn off of it for free as well. And then after I've explained the trade from Friday, then any questions asked, I'll just go through. Obviously, there might be some questions that I won't go into full detail for, obviously, because there's a lot of boys that have paid for that information, so I ain't gonna hand it out for free. But don't be scared to ask any questions throughout as well, because worst case scenarios, I'll say that I can't answer that for obvious reasons. People paid for it. So when it comes to Friday's trade, obviously I only took the sell, but I predicted this buy as well. If any of you watched my high time frame analysis from the morning, I said that the high time frame was looking bullish, obviously. However, I was looking for some sort of internal sales down to a point of interest before potentially taking buys to the upsides. Obviously, after a nice 15 hour trade, what's the point in taking any other trade apart from that? So only high time frame I use is the 1 hour. I think that's enough. You won't need to use anything else for me. But essentially, what I'm looking at here is obviously we're looking for some sort of continuation on the higher time frame. So we've seen the break of the swing high up here. When was so this is 7 a.m. open. So at this candle time, 7 a.m. open at Frankfurt, we know that we've just had some sort of extension followed by a break of structure of this previous high. So we can assume that we're bullish within this swing. So from this swing low to this swing high, we know we're looking for some sort of buy within this zone. However, obviously we're not trying to take any buys above the 50%. So obviously looking at our PD array, we're looking to buy in our discount, and we're looking to sell in our premium. So obviously if we're looking for buys in our discount, we're looking for the market to retrace down below this 50% level here. So jump down to the 15 minute, looking for points of interest. Um, what you're meant to do is obviously, because we're only looking for buys beneath the 50%, everything above is completely invalid. Do not look at anything above the 50%. So now we're looking at the discount area. We can tell that the first point of interest is this order block here, because this fair value gap from this candle to this candle is invalid, because you can see the candle straight after the creation of the fair value gap has tapped into it. So this candle here, by tapping below this candle into this fair value gap, it makes it completely invalid. So you know it's going to retrace down to our 15-minute order block. I targeted the 5 minute balance just above, because we could have seen some sort of reaction from here, but that was just a bit more conservative, just holding back a couple pips essentially. So now we've got our target for where we want to see our buyers from. We can safely assume, because we're above the 50% of the breaker structure, we can now safely assume that we're looking for some sort of internal reversal down to this level before looking for buyers. So obviously, if we're looking for some internal reversal, we're looking for a bearish setup that we can take internal sales down. So looking at the internal structure now, what we're essentially looking for is a big market structure shift, or a previous low of significant value get broken. We want one of significant value broken, because obviously it's very hard to anticipate reversal when it comes to internal trades. So you'd like to see some sort of significant structure rather than just internal low like this. So for our significant low, we were looking at this low here on the 15 minute. So once that got broken, we can have some sort of idea that we are going to see some retracement now. Because obviously, if we're changing all the flow, we're seeing lower low get created, then we know there's some sort of corrective retracement while building up liquidity. So what we've seen, once this gets broken, our swing that we're looking for sells from is from uh, this high up here to this low. We're looking for sells within this zone. However, there's no valid point of interest, so we know that's going to sweep the level. Obviously, it's never going to be like this in real time. Like I was looking for some sort of sales within here, however, had no confirmation. So then once it swept the level, I was looking for a different type of confirmation. Like you'll notice that in the student section, that there'll be 20 of us in call. We'll all be looking at similar things. However, if it doesn't play out, we adapt to the market and we look for different opportunities. So I was originally looking for some sort of sell within here. However, there's not exactly any valid price action in here. However, because it's such a large gap, I was still looking at some sort of sell. instead of me getting the confirmation for that, we've seen the sweep of liquidity followed by the break of our 5 minute low, which I would consider a protected low. So I use 5 minute for figuring out our protected lows, but with experience, you can just identify that while being on the 1 minute. So after this protected low got broken, I was looking at a point of interest to sell from, and using our balanced price range. I'm not going to go into detail with this either because I'm still learning this confluence myself, so I'm not going to really teach something that I don't know too much about. It was just a nice little confluence. Um, our point of interest was within this 5 minute order block here. This 5 minute order block broke this structure, so this was going to be a point of interest to sell from. On the 1 minute, our only point of interest to look for sells from is this fair value gap here. So that's the only valid price action within this range for me. So we were looking for that to be filled, which we've seen filled, and using my entry protocol to break even. We had a small stop loss of 3 pips for our funding accounts, and then we've obviously seen it drop. So after we've seen a high time frame previous low get broken, followed by a lower time frame internal previous low get broken once again, followed by a retracement and respecting our order block and our 1 minute refinement of this order block. We've entered, obviously, we've seen it run, broke this low very nice. Then we've seen a redistribution model where we've had a build of liquidity followed by a small retracement into a valid point of interest before continuing to our take profit. Yeah, it was a very nice trade. I think quite a few of the boys caught. I think maybe about 5 or 6 of us caught it. But yeah, it was very nice. After a winning trade, even if my bias is completely correct, I still do not look for any sort of trade after that. I just hop off the market, like secure my profit, call it a day. But using our 15 minute order block as our target, we've seen another confirmation for a buy, which using the BPR as well, which I said I'm not going to go into any detail to, um, as confluence, which is essentially we're looking for some sort of point of interest within our BPR 50% range. But we've seen this 1 minute fair value gap here with build up of liquidity above. We've seen the previous high get broken up here, followed by an eternal break here. So we know that we are essentially going to see a bullish move anyway. So it's entered our 1 minute fair value gap. I didn't take this, I take Reddit. Like I said, I'll hop off the market as soon as possible. But you could have entered exactly with our entry protocol, which I teach the students. 3 pips once again, targeting the high because we know it's going to, well, we can anticipate that it's going to create a new high. Whether or not it closes above the high, that's not a problem. But targeting the high for liquidity wise, as our external structure could have caught another 20 RR essentially. Yeah, Friday was very nice compared to the week beforehand and like majority of last week. Friday kind of showed us that our price action is kind of slowly getting back to normal, and our IR trades are going to become a lot more common, hopefully, within the coming weeks as well. But obviously, we'll see tomorrow. We'll see next week if this continues or not. Anyone have any questions? Haroon, mate, you better not. You better not piss you out of this one.
Regarding this, what you just said, I don't have, but I have a question because I have some confusion from the other day. Because I asked you what zones would you say it's mitigated and which not? Because sometimes it taps in inside the zone and sometimes it just taps like the line of the zone. And you said that if it's tapped on the higher time frame, it's already mitigated, but on the lower time frames, like on the 1 minute, it's different. No, so could you
Yeah,
tell me
yeah.
which
I'll
time?
show you that in 1 second. I'll answer the simple questions that everyone just typed out, and then I'll get onto that and I'll show you some examples as well. How come she did not enter off the sweep of the invalid 5 minute order block that swept Q1 liquidity? I'm guessing you're so no, so the Q1 liquidity up here, you don't enter after this, that's just a little confluence. How you're talking about this sweep here, why I didn't enter off that. Um, I do enter off it sometimes, however, I would like to see some more confirmation. I would regularly enter off these type of sweeps. However, obviously the sweep of these like internal swings for our entry is a lot more uncommon, and it's also a lot lower probability compared to our normal like entries with confirmation like this one here. Um, Obviously I'm trying to be more patient myself. I'm still working on trading myself. Been trading for like 2.5 years now. Like no matter what anyone says, no matter if they're your mentor or not, like everyone's still going to be somewhat working on their psychology. So me personally, the majority of the losses I took last year are from trying to anticipate these type of entries up here. simply because I would think that nothing's valid in here. It would take out the high, and then it would just end up reversed. Like it would end up just blasting my stop loss after trying to enter directly on the sweep. So I wanted to wait for some more confirmation anyway. Need to be a lot more confident in this trade alone. Um, can I trade you a Nike Tech for a free membership? Mate, I'm a Ralph Lauren boy. Don't do no Nike Tech over here. How can I see my profit loss of my journal in Notion? Uh, boy, I'll get into that with students tomorrow. I'll do that in call in the morning because I doubt a lot of people in here want to even know about journaling at the moment. I think they're more excited about the analysis more than anything else. But I'll show you tomorrow. It's very simple. Very, very simple. So Haroon, let me go through some examples. If you want to unmute your mic as well, so then I'll talk you through and you can ask any questions as well. So essentially,
Okay.
what we're getting into is it's a bit more advanced explanation of the fractal market. So obviously, if you don't understand what I mean by the market is fractal, if we see on a higher time frame, it creating high highs and high lows like this, printing a bearish, bullish sentiment essentially. What we can assume is that the lower time frame is doing the exact same, creating. Oh, one thing. So pretend this is the 1 hour. On the 1 minute, we know it's going to be a bunch of little highs and lows created, constantly creating a higher time frame trend. Obviously, we'll see some sort of lower time frame reversals as a pullback. This is so hard on the trackpad, followed by a continuation to the upside. So if we say the market's fractal, the lower time frame is copying the higher time frame trend essentially. So Haroon's asking when to know when a higher time frame point of interest invalid versus a lower time frame point of interest, because I'll find some examples now as well. I teach the students that a high time frame order block that we would invalidate on higher time frame, we would validate on the lower time frame essentially. So let me find an example. So oh, okay, I got a good way to explain this actually. So sorry, so you understand on the 1 hour, if there's a higher time frame trend like this, on the 1 minute it'll be the exact same, just followed by a bunch of smaller pullbacks and smaller extensions. You understand that, right?
Yes.
Yeah, okay, good. So essentially when we're validating a order block, and we're looking for our entries, we know that we're trying to essentially match the lower time frame to a higher time frame. So when we have some sort of pullback on the higher time frame here, we're looking for like change in order flow and a change of character essentially, in order for us to mimic the higher time frame trend. So we're looking in this example here, we're looking for a previous high to get broken on the lower time frame. Once we've entered our PD array and our point of interest, we're looking for a lower time frame break to the upside because it shows that it's ready to start printing higher highs, so then we can continue on the higher trend, correct?
Yes.
So when we're looking at a 1 minute structure, and I tell you boys that a order block or a fair value gap would be valid for an entry just after the sweep of liquidity on that. Essentially, what that boils down to is how the market is fractal in the 1 second as well. So it'd be hard to find a specific example. Um, it's very specific for certain entries. Harry, do you remember the day that we took that entry that confused you? Because I know this is based off an entry that we caught midweek, but I don't know when it would be. Um, okay, yeah, yeah. This will be an example here. It's not the best example, however, it'll be good enough. So essentially, this is our order block that we've seen the market react off to continue lower on the lower time frame, and obviously on the 15 minutes, a nice little move down from here. Um, this order block here, a lot of people would consider this completely invalid on the higher time frame because it's been tapped immediately after it's left the order block, followed by a tap straight back in. So a lot of people would consider that invalid. However, let me to show it on a different time frame actually. Um, now it'd be better on the 2 minute, but I don't even have that. Uh, so this is a whole order block on the 2 minute essentially. From the low to the high here, this is going to be one candle on the 2 minute time frame. So this being a whole candle on the 2 minute time frame, we can see that it's already been mitigated instantly. However, you see the way that we refine it now to um, once the 2 minute order block is refined, we see that this is the refined order block within the 2 minute order block. So, Haroon, what you've been asking me, yeah? On the 1 minute, if we see a order block or a fair value gap that's already been tapped, why do we enter on the sweep of that? Because essentially, if we dropped down to the 15 second or the 1 second within that order block, you can then refine it to a unmitigated order block. So when we're looking for the sweep, it means that obviously the 1 minute order block is completely invalid itself, or the 1 minute bounce is completely invalid itself. However, we know we can anticipate that there will be some sort of refinement within the seconds time frame for us to enter. So pretend that this order block here is on the 1 minute, this whole massive order block, we can see that's already mitigated straight after. However, if we had the seconds time frame, we can refine it to this zone, so we know that it's valid and it can still um, be valid for our entry. So we know that we would be waiting for this level to get swept into some sort of refinement on the seconds time frame for us to enter. So just because the higher time frame is mitigated doesn't mean you can't refine it to a lower time frame. Same way that we can look at the 1 hour time frame and assume it's invalid. Like this is a pretty bad example. Actually, no, this is a good example. So this order block that we've taken trades off of multiple times, we can see that this liquidity here mitigates this order block. So we can assume that, okay, we're not going to see any other reaction off of it. However, if we drop down to the 5 minute, there's a 5 minute imbalance down here that we've seen, and we took a trade from the low down here. There's a 5 minute imbalance down here that the market has entered in down here. And we've seen a very nice move directly just from this level itself. So just because the higher time frame is mitigated, and when I say high time frame, that could be like this example from 1 hour to 15 and 5 minute, where there's potential other point of interest within here, or like our entries, which is 1 minute points of interest, where we could see seconds, like point of interest within the seconds refined within that point of interest. If the higher time frames mitigated, it doesn't mean that there isn't anything else valid in there. But you can tell that because there'll be a lot of space within the candle, as in you can see this as a large order block. This order block here compared to the order block here, this is like half in size. And obviously, utilizing the other time frames, if we go back, we'll be able. Oh, sorry, getting pain. Um, on the 5 minute, there's a fair value gap literally just beneath this 15 minute low here. So we've seen the 15 minute order block get mitigated first, and then we're looking for the sweep of this low into some sort of lower time frame order block to be able to get our entry. So we've seen the low get swept right here, which has caused the big move to shut. That probably isn't a great explanation, but that'll do the job for now. Does that make sense?
Yeah, bro, thank you.
Any other questions then?
Yeah,
Mm,
Tommy, I got one off
Go
after
for it.
that little explanation on the unmitigated order blocks and fair value gaps when you're jumping between like higher time frames and low time frames and wise. See when you man catch your move here, like let's say for example you've got like, I don't know, you're bullish on GU, find a
Yeah.
1 hour, it's tapped into it, you call the move,
Yeah.
and then there's a pullback happening. Like,
Yeah.
because I remember there was a trade on Friday I tried to take where I tried to catch the pullback, but I got taxed on it, like liquidated more or less.
Are
Stopped
you
start
talking? Are
early,
you
and
talking
then
about Are you talking about this
I think
retracement
it was
here?
that same
Are you
trade
talking about
there.
this one
Yeah,
here?
I believe so. So you see
Yeah.
where you've marked out that liquidity sweep
Yeah.
after that Q1 liquidity. I think I tried to enter there on Friday. I got stopped out,
Well, you got
and I did
stopped
it
out
because I
up
clocked
here.
out.
What do you get stopped out
Yeah,
up here
somewhere
or
around
like
there.
retracement
Yeah,
down
a
here?
bit later. No, a bit later.
Hmm.
So I had that. Yeah, somewhere in that area. I can't remember exactly, but
Yeah.
and I got stopped out there. And in my mind, I was like, okay, I know G is going to be bearish. Like,
Hmm.
once I hop off, if I hop off the charts and I have a peep on it again, I'm going to look back and I'm going to be like, okay, cool. I got
Yeah.
stopped out like tax and shit like that.
Hmm.
Obviously, I knew like how you explained how like trying to mark out the sweeps and stuff like that. But you got like any other advice in terms of like
Just
confluences and stuff
yeah.
like
Yeah.
that,
So
or just time.
have a search for balanced price range. It's an ICT concept. I've been introduced to it quite recently myself, so obviously I can't speak on it too much because I'm not trying to spread false information on that. But
Yeah.
every entry that we've caught or like even looked at, even entries that we've hit break even from is still a valid entry. So obviously it doesn't matter hit break even, but the entries itself, BPR is unreal. Like it's worked every single time. BPR is essentially you could explain it as some sort of order block, but it's the highest move of the swing. So from the low to the high, you're hoping you expect it to react off the midline. So for this entry here, like I said, I was trying to get my original entry within here, and I wanted to
Mm,
see it tap my order block here before showing some sort of hesitation and reaction, which obviously I didn't get over here. A couple of the boys entered, but that's on them. They're like bad psychology on their end. But just be conservative with it. If you use simple confidences like that, where you're trying to you like you know that the past 2 weeks that it's been reacting off the midline, it's been respecting the midline, then if it doesn't respect that, then don't hop in. And if it did respect it and you take the trade, cool, who cares? You lost. And then you've seen some sort of reaction after taking after the sweep. You've seen more confirmation. You hop in again. Like take one loss, hop in another. Calm. Just
mm,
be conservative. Be patient with it, and you'll be fine. If your confidence line up, like I use ICT concepts mixed as in like PD array and Fibonacci retracement and stuff like that, alongside
yeah.
quantity theory, which is inspired by ICT, but it's not the same. So what you're doing is you're trying to align time with price the same way that in here you're trying to align your like mathematical reasons, as in like there's actual reasons using the balanced price range. Like there's reasons why it should react and hold the midline. It should respect the midline. With the same way we're aligning time with price, we're aligning mathematical reasons with our entries as well. So it isn't just
Mm-hmm.
based off liquidity sweeps and stuff like that. There's actual like higher motives behind it. So if you line up two things that correlate, then realistically,
It's a
if you see some sort
no-brainer.
of correlation, then like it'll work. The same way that our BPR for our actual entry here, we're looking for some sort of entry at our midline. This is the first point. This is our first point of interest that's valid uh, anywhere near our BPR. So it's held the midline. We know it's valid. Like just find little confluences that implement like your existing confluences, and they'll just go in very nicely, like fucking hand to hand. You know what I mean?
Yeah, appreciate it, bro.
So what's your entry confirmation? Can't speak on that. That's for the advanced. Can you please delete the advertisements? Yes, can do. Is there an ideal situation where you'd enter off sweeps of invalid point of interest? Well, I'm guessing you've all come from my TikToks, or if not, from mutual friends or whatever. But you'll see that I do regularly enter on these sweeps, and they do usually hit quite nicely if I've got the bias right. However, there's no exact limit for where it could sweep, essentially. So when it comes to sweeping, when it comes to sweeping this level, there's nothing saying that it can't sweep up to here before starting to drop. There's no saying that it can't sweep up to here for it's dropped. So it has no limit of how high it can go before deciding to reverse. And that's what I don't like. Whereas if we looking for our entry here, we know the limit of waiting for like obviously I enter off reaction, so I know that the limit that I'm waiting for it to react to is here. If it goes any higher than here, I'm not looking for any sort of entry. And realistically, if it goes any higher than here, I'm not looking for entry anyway. So knowing that that high was printed there, I know that it gives me some sort of mental limit to know when to enter or not. However, with a sweep, we all I know is it has to take out this high. I don't know if it has to reach this level first before I look for my entry. I don't know if I have to reach this level first. So I'm just doing little things to, even though I would have taken this when like maybe even a month ago or a month and a half ago or something like that. Even though I take it back then and it would hit for me, trying to be more psychologically stable in a way. So then I know essentially that um, like it'll help me long term because right here, if it continued pushing up and then showing reversal, I'd still enter it. But if it closed up here and it's still hesitating, like that's not good for my psychology because I'll sit there waiting and waiting and waiting and waiting. It's just not good. I'd rather see some another lower time frame break before looking for some sort of essentially re-entry because it didn't need to give me this re-entry here. Like it could have continued dropping. That's fine. Like I'll catch another move another day. Like It doesn't matter. I just don't want to try and anticipate the reversal because obviously we've seen the break of the previous low. However, on the 1 minute, the close above here is still some sort of hesitation of continuing bullish. So you don't want to hop in if there's any sort of hesitation on the other side. Do you use session high and lows as take profit levels? No, I'd simply use 1 hour targets. So no, sorry. So you saw on the 1 hour. Let me show you. You saw on the 1 hour how I said that we were taking an internal sell down to an external point of interest. So we know that this is our bullish swing low, bullish swing high. So we're taking sells down to a valid point of interest in order to take buys to continue to the high. So knowing that, we drop on the 15 minute, looking for a valid point of interest on the 15 minute within our 1 hour swing low, swing high. First valid 15 minute point of interest. That's my take profit. Obviously, I've refined it this time to 5 minute imbalance. Not needed. Like I said, it still smacks my 15 minute order block. But no, I don't use daily highs or daily lows. I don't use liquidity as targets at all, unless I'm targeting something like this high, where I would target liquidity. But if you're targeting internal trades, then you would target point of interest a lot. So, what indicator do I use for quarterlies? I'll put it on the screen now. It's called Day at Joshu, right there. Oh, Harry already replied. Appreciate it. On what reason you set the SL, the short trade, exactly on that number? Because I enter off reaction. So essentially, I'm not going to go into too much detail how I do it. However, I always have 2.5 pips or 3 pips as my stop loss. I enter based off reaction, so I don't use a limit or anything. I wait for it to enter my zone, which obviously was after sweeping my line here, and then I wait for some sort of reaction before I manually enter. So that's how I'm able to get my tight stop losses and stuff like that. Because realistically, I know if I enter directly here with stop loss just above the high, because we've refined it, we always refine it very nicely to the 1 minute. It should have no It should have no reason to continue back up, maybe into this fair value gap or this order block. So the market wants to continue in the direction it can without any sort of hesitation or any reason to continue higher. Like it has no reason to continue any higher than the first valid point of interest, as it quite literally just wants to continue. Like so, I know that if it started pushing back up and it was stop loss here, none of this would be valid anyway because it would either react to the only 1 minute refinement that we have, or it would just continue making you high or something like that. Can you run down quarterly theory? Yeah, I'll give a brief explanation in a second. What's the reason you didn't take the PD array from Q2? Because you said no confirmation. What's the reason you didn't take the PD array from Q2? You might be a bit confused what you mean about PD array because that doesn't really go with quarterly as in like the way you're explaining it. But the reason I didn't take it from the sweep of this Q1 is because obviously we're waiting for this previous low to get broken, and once that got broken, there was no valid order block within here. So then we've seen the sweep, and then we've seen another lower time frame break before looking to enter. So because there was no valid order block, then we wouldn't enter within that zone. Obviously, I was looking at entering because there's a massive gap here, so we could have seen some sort of hesitation in there, but I didn't take any trade then, so there was no confirmation for me. Then we saw a sweep followed by confirmation, so then we entered. On Thursday, how come you entered so far down and not off the 1 minute order block that was printed in Q2? Um, Thursday. Let me read the question again. On Thursday, how come you entered so far down and not off the 1 minute order block that's printed in Q2? I didn't enter this at all. I was just using it for a explanation. I was simply just using it for an explanation of validating zones on the high time frame and lower time frame. Which two indicators are you using? I'm using the quarterly theory day at Joshu and just the fractal high and lows. I don't really even use it. The high and lows are just for more show and everything. I just like the little red dots essentially, but it's not needed at all. Um, Sorry, who asked me a question a minute ago? Someone asked me a good question. I completely forgot about it. Oh yeah, yeah. Explain quarterly theory. All right. So this is explained in more detail on the advanced chat, but I'll go through the basics of it. Um, so quarterly theory. I only use the 90-minute cycles. You can use it using the daily cycles, or you can use obviously the yearly cycle is compressed to the quarters of the year. So obviously 4 months is 1 quarter. So we're in the first quarter of the year at the moment. It works the exact same way. So the way we view it as is AMDX: accumulation, manipulation, distribution, and then continuation or reversal. The way we use quarterly theory personally is by anticipating what happens for the rest of the day based on the first quarter. So if we've seen the first quarter range or build up liquidity like this, we're looking for the second quarter to manipulate the high or the low of the first quarter before breaking structure to downsides, before seeing some sort of entry within Q2 or Q3, because Q3 is our distribution. You can hop in either on the manipulation or the distribution. So you're essentially waiting for the high or low of the first quarter to get manipulated in order to see your confirmation to the other side. However, what I teach in the advanced students as well is that this is not always the case, as in AMDX being our cycle is not always the case as well. We could see XAMD, which is where the market has some sort of continuation in the first quarter before then building up liquidity in the second quarter before the manipulation, followed by the reversal, followed by even hopping in down here or potentially hopping in the distribution before continuing. And obviously there are other quarters on the other side, so you could see some sort of reversal up here followed by a continuation down here. There's multiple different things that go into it, which I teach in my student section. But there's a lot of ways that this can go, as in there's lots of different orders. There could be um, accumulation, manipulation, distribution. There's lots of different combinations that you can find, but obviously you all base it off of what you see in the first quarter. If the first quarter shows no accumulation, then you're looking for the second quarter to accumulate. If none of these quarters accumulate, then you're looking for the third quarter to accumulate before manipulation, then distribution, then continuation or reversal. But yeah, that's a brief little explanation for you. But I'm not going to go into any more detail because that's literally all in the advanced section. Yeah, any more questions? Harun, I know you have more, so fire away.
Uh, Just like you start with your Fibonacci on the 1 hour, and then you search for 15-minute zones. And I
hmm
want to ask, when you find your 15-minute zones, how do you start refining it to the 5 minute, to the 1 minute, and like just breaking it down
You
from
you
there?
don't refine it at all. So my target for Friday's trade is because uh obviously when order blocks are created, if it's a valid order block, you want to see a fair value gap get printed straight after. On the 15-minute, it's completely invalid for our take profit because obviously it's already been mitigated, so we're not looking for that to be our take profit. Um, due to it being January, I would never target this imbalance usually. However, due to it being January, I wanted to be a lot more conservative, like I said at the beginning of the week. Obviously, it wasn't showing us as many trades and as many nice entries as we would usually see, because obviously it's the beginning of the year. So this target isn't a normal target for me at all. I do not refine my take profit at all. Once I find a 15-minute uh, order book or point of interest like this, I would simply just target the top of it. So um, my phase one 200k, which I'm now 1% off passing after this trade, I would have passed if I just targeted like I usually did, like that. But obviously, I wanted to be a bit more conservative as we're trying to get used to the first quarter and kind of understand what it's trying to show us and see if there's anything different. So that you don't refine your take profits at all, and you don't refine your higher time frame entries at all. The only thing you refine is your actual entries after hitting your high time frame point of interest within your PDRA. You look for confirmation, then you look for your refined entry, which obviously, like I explained up here, I explain every morning. So you don't refine these at all, and you don't refine your take profits at all. This is just a one-off while I try and understand what January's trying to show us essentially. No worries, Bubs. What time do you get on the charts and do analysis and look to take trades? I get on at about 7:30, 7:45, depending on how much I snooze my alarm. I make the video on my analysis literally the second I hop on the computer. So my analysis is usually done by about 10 to 8. And then I'm looking for my entry between 8 a.m. and, or it could be like 10 to 8 where I could see my entry potentially. But I'm usually looking for Yannick, mate, can you mute your mic? Sweet. Anyway, um, I'm usually looking for my entry between 8 a.m. and 11. Recently, beginning of January, majority of our entries have been after 11 a.m. Well, no, I don't say the majority, but we've seen quite a few entries after 11, so between 11 and 12, which is not usual. But as it gets back to normal, we should see majority of our entries between 8 and 10 a.m., which is ideal for us, and we'd like to keep it that way as usual. Why is it exactly 90 minutes? Because the whole quarterly theory is based on the algorithm and how price resets and continues and delivers price essentially after taking liquidity and so forth. So 90 minutes is just essentially based around the whole algorithm and how that was coded and how that works essentially. For the second trade on Friday, the buy, can you show me the entry you would have used using PD array instead of BPR? I wouldn't use a PD array on the entry. I don't use PD arrays for actual entries because we'd find that all our entries would be under the 50% anyway. But I'll still show you. So from the low here to the high, obviously when we're looking for entries, we're looking for order blocks or points of interest in general. We could probably use a 5-minute order block for this. Yeah. So beneath the 50% for some sort of valid point of interest. We've seen this 5-minute order block here. We're not going to bother refining it because obviously this isn't how I'd enter my trades at all. But if you're using your PD array instead of your BPR, then you'd be looking for first valid point of interest beneath 50%, which is this 5-minute order block, which obviously is tapped before shooting up. Yeah, that's how you use fib, and I use it on higher time frame as well when it comes to validating them. But I wouldn't recommend using fib on lower time frame for your entries because it won't really make a difference at all. Any other questions? Harun, mate, don't be getting all shy. I know you had like 5 more questions.
Well, the problem is my questions are mostly related to the advanced stuff. So if it's no problem with respect to everybody, I'm gonna leave, mainly those for Wednesday. But I asked the
Yeah,
other
yeah,
question.
yeah. You could. James, what the fuck was that? Harun, you can ask me. So you can ask me tomorrow morning if you want when we hop on call for London, and I can record it as well. If it's any like significant questions, then I'll record it as well tomorrow morning. When do you move stops to break even? I move it after breaking some sort of lower high. So for this sell here, I was stops to break even on the candle right here when this candle closed here because it took out this low and closed below here. So that's when I went stops to break even after it took out this low.
Are you trained to tomorrow's London session?
False. Silly question. Silly question.
Yeah, fair enough.
I'm guessing you're asking because of news 7 a.m.
As it is, I didn't realize. I'm asking because it's bank holiday in America.
Oh yeah, no,
That's
no, that's fine. I've never really had a problem with US bank holidays. It's mainly UK bank holidays that slow down GU for me. Obviously,
yeah.
there'll be a bit of a less chance that I'll be able to get an entry tomorrow, as it will be slower either way. Because obviously it's GBP to US dollar, but we should hopefully
Yo,
still some sort of move.
yo, Tommy,
Yeah, what's up?
why is this Janet guy muted? Like, do you mean to mute him or what?
Yeah, his mic was going
Alright.
mental. Now it's calm. Now it's on mute. Cheers though. Any other questions? Apart from Harry, obviously we'll go through everything else tomorrow. But if no one else has any other questions, then this might be the webinar done.
Alright, when you finished here, can you go on like student call for like 2 minutes afterwards?
Yeah, can do.
Like when you're done with this webinar.
Yeah, it's
I
fine.
bet.
Difference in significance between a normal first break B1 and internal break B1. Eddie, I'll go through that tomorrow morning because that's the advanced shit. I can't give that away because that's the model I created. But I'll go through that tomorrow morning. Message me if you're going to be in the student call in the morning. I'll go through it then, and I'll go through everything with Haroon as well. So we'll have a student call, like kind of webinar while live trading tomorrow. Yeah, if you're not in if you're not in the live trading tomorrow, then we'll hop on a 1-to-1. and I'll run that tomorrow as well. Same with you, Haroon. If I don't explain it in the morning, which obviously I will anyway, but if it ain't clarified enough, we'll hop on a one tomorrow. What time is live trading tomorrow? I usually join call about 8 a.m. So after I've done my analysis, recorded it and posted it, then I'll hop in the call straight away. Usually have about like 15, 20 boys in there anyway. Have a nice little group running at the moment. If anyone's interested in the mentorship, unless I've specified otherwise, then there's no spaces at all, unless I've said to you differently for any other reasons. But I might open up a few spaces in about 2 months. If not, it won't be any significant spaces at all. I'll open about two spaces, two free spaces. Also, when I hit a certain goal on TikTok, I'm close to 10k likes on TikTok, so that would probably be hit within the next couple months anyway. I'll release two spaces then, and then I won't release any other spaces until I hit some sort of other target, which I'm long away from anyway. So you probably won't see any other spaces until summer. Yeah, very limited, very exclusive. But yeah, if no one has any other questions, I'm gonna end it here. I'll give it another minute for you boys to type out any other questions or unmute your mic and ask. Otherwise, this will be the end. So let me know if you boys have any other questions first, and then we'll see what happens. I can tell which fair value gap or order book will work or will be valid. Obviously, you can use BPR like I've just briefly explained. However, for this example here, explain it like we're using a 5-minute order book. So if this is our 5-minute order book that we're looking to enter off of, we're looking for some sort of 1 minute refinement. Obviously for this one it's very simple because the only point of interest within here, well, the very first point of interest we can see within this 5-minute order block is this 1 minute fair value gap. So it's very, very, very simple for us to be able to analyze this. Let me find a example that's hard. So for this order block here, obviously we didn't enter off of this and it wasn't valid. However, as far as it goes to lower time frame validation, I'll explain this. So this order block here was invalidated because of this liquidity here. However, like I was trying to explain, that you can still refine it. This fair value gap from this candle to this candle here, because it's been created within the order block and outside. So because it's printed outside of the order block as well, this is not a valid 1 minute refinement at all because it's printed outside of the actual 5-minute range itself. This order block here, 1 minute refinement is valid. However, obviously, as it goes to higher time frame and our general direction, it wasn't valid yet for our entry. But yeah, so pretty much all you need to worry about is if the 1 minute point of interest was created outside or inside our range that we're looking for refinement. So because this whole fair value gap printed outside the low of this 5-minute order block, this is not valid and we would not enter off of that at all. Hope that helps a little bit. Thanks for education. No worries, Yannick. Yeah, I'm gonna guess that's all the questions. I hope. Thank you so much. No worries, mate. But yeah, I'm gonna stop recording now. If anyone has any other questions,